Greetings, market rebels. Welcome to this week's macro measure video combined with the sector situation video. It is Friday, September 19th, 2025. We supposedly just had the quad witch, the largest expiration ever, etc. Had a nice week overall. Here is the Trustee Market Rebellion disclaimer. Here is the Trustee Market Rebellion intellectual property rights notice. Here is last week's slide. I've got a couple highlights on there. I think that the main ones are going to be in this bright pink color. So yeah, the forestalled by the AAII survey, in other words, the overly bearish sentiment, which is contrarian, just seems to keep things going. And with the underinvested story we've talked about for a while, we noted that last week that still looks very good, but there's still risks. We noted that the problem that could have developed was fixed. We noted that they got even more bearish, which probably would keep helping things, and it seems like it may be doing that. The downside, we've still had that sort of line. Just to sum it up, why would things break here? Really can't see a reason why, other than a serious news development or something breaks in the financial markets themselves. That's the kind of thing we've been thinking it would take for a while. And without that, stocks have continued to find a way to rally. Um, we mentioned about IWM and XAU. Both of those were still worth keeping an eye on. And both of them, I believe, had at least a pretty good week overall. I think, anyway. Yeah, I'm pretty sure they both had like very good weeks. Let's see. So where are we on the pointer? Yeah, we did say that it's one of those times where they're pretty much bidding everything up. Something will probably give eventually. Um, breadth and sectors last week, they were solid overall. There were some interesting developments. Nothing really to write home about in terms of problematic things unless you wanted to nitpick. Um, we noted that the same theme or reason right here with the AAII underinvestment. We also talked about that there's still potential on these charts, right? It's a very solid potential on the major index ETF charts. We talked about some levels. So with that in mind, we're going to get into this week's. I don't think I'm going to spend too much time on this. We're going to go into, it should be showing. Why is that not feel it? Oh, I might have overclicked by one. Let's see. Is it advancing right now? Seems like it might not be. For some reason, it just seems like it's not. Let me get rid of well, it's giving me a hard time to get rid of the laser pointer for some reason. Let's see if it lets me advance it or whatnot now. Likes that more for some reason. Let's see. So this week, there it is. I'm calling this slide mid-channel madness, which we'll see. And I'm not going to spend much time on this, but again, I think that I saw more of this. The mid-channel mattered. Play this on 2x, still in interesting times. I saw more underinvestment, something that was even more substantial than I'd seen before. So that's really going further in convincing me that yeah, this situation where too many of the big players may have waited too long, now it's sort of thwarted the rough seasonality we normally see, and now they're really starting to go into panic mode. There was a shift, which we'll look at with the AAII, CNN, fear and greed. There's still plenty of room on it and on the charts for this market, in my opinion. Anyway, mega cap concentration is supposedly getting very high. Some names are making stupid moves. Have to admit this does happen mostly in extreme times. Still sticking with the news will be required to really spin this market around, which is basically song remains the same. To really break, we need something. I'm starting to think maybe there's a socio-political flare-up thing that happens again, um, based on all the rancor that is out there. Still talking about IWM and XAU in my book, still with the same mix of what's going on, everything's being bid. Austin Powers is where we are in terms of mixed bag baby on the breadth and sectors. We have to just keep going with this thing, right, until something cracks. And this is proven, right, that these trends just last longer than most people expect. We talked about this for a while. It's pretty much the same. I still think you could have an end of year melt up unless they're getting it done now. This mid-channel situation, again, I'll show that. So we'll talk about that. I don't know why it suddenly that mattered, but we added it, I think, to the chart 3 or 4 weeks ago. It's my guess, and it seems like it keeps mattering still. Then, still think the odds favor some kind of a dicey thing happening, just because you just don't get extremely long periods of time without anything, where there isn't something that causes a problem. But that's really it on that. So let's see if we can stop the share briefly, and we will reposition everything, and that way we'll be able to get moving on things. I'll just leave this over here. I'm going to get my oh, it's strange that this is right here. I'll do this and do the screen 3 share. Well, it should be bringing up my, I think that's bringing up my, I don't know, it might have launched two things here. I don't know why it did that. Two Zoom launches at the same time. It's bringing that up. Let's see if I can get the, where was that at? That is something strange happened with my browser that I wanted to show. So I don't know what happened on that. Um, Oh well, I'm gonna have to figure that out just briefly. Bear with me, please. I have a quick browser check that I wanted to do, but it seems like it might have gotten rid of that on me, and I don't know why that would have happened. Very strange. Some very strange things happen sometimes with this. Well, I had some tabs that I put together, very brief, by the way. They were not heavy duty tabs or anything like that, but they may have really taken those away from me, and I'm trying to figure out why that happened because that was, oh boy, that's frustrating. Oh well, I'm gonna have to let that go. I don't want to waste any more time, so my apologies on that one, gang, but that is strange that that just sort of disappeared here on me. So let me get to back to my, hopefully my charts will show up, and they are. Yeah, I don't know what happened there. I had a I had an AAII, which I do want to show. I think I'll just pull this over here, and hopefully this will get us started. But yeah, the AAII was one of the main things I wanted to show. There were a couple other things too, but very minor. But this is a big jump, right? So you have this nearly 14-point jump in bullishness. So that's pushing people, right? The way this market's behaving is everyone's, that's been around knows, right? Price out has an amazing effect on sentiment. And now that things have just kept going higher and higher with very little pullback, it's convincing more people to get involved. So when this plunges, right, if we get a real spike in bullishness and then we get a real plunge in bearishness, that could be the sign that we're getting a little too tilted that way. Maybe we'll finally see something at that point. I had this and a couple other things. The CNN fear greed is really not anything that you should really, I don't think, get very concerned about right now. It's somewhat in the greed zone, but it's not even near extreme greed, right? So I don't think there's anything really big here. I did note though, there's another tab that I had that I've lost apparently, that one of them was that there is way more underinvestment than I guess I thought based on other graphics and data that I'd seen. So that does kind of go a ways into explaining what's been going on and what's happening where it just won't go down. There's no real serious pullbacks, keeps getting bid, crazy moves in some stocks, players just scrambling, right? Because they are really going to have to chase this market. So I think some of what we saw with some of these lower tier stocks, we had a lot of UOA the last few weeks on lower tier stocks. A lot of these things are $1, $2, $3 stocks, and they make these pretty significant percentage moves that we try to get involved with on the UOA, especially ones that have short interest. But right, it's hard to pass those up. I mean, that is really not what I would say is our bread and butter. But it's very hard to pass those up when they're working and you're in this kind of an environment that's conducive to that kind of thing. So, we've just been trying to go with them, put them in front of folks and let them take a look at them. Because, someone has to, right? They've got UA, they've got short data, they've got charts that are starting to become compelling. You see other things being chased, and a lot of them have really made moves. I mean, even at one point, at one point a while ago, open was one of those, right? So this is why you really can't rule these things out. There's I could if I had the time, I could remember many of these types of stocks that have done these kind of things and then gone on to, have bigger moves to the upside or just ultimately a major pullback, but after a major move to the upside. So there's opportunity in those things. And a lot of times you can play those with very little extrinsic value in the options. So, you're essentially buying just a stub of the stock share price, and you're getting high delta, very little theta, and it's not even costing you as much as the shares. And these things do move. I don't have any off the top of my head that I could say, oh, that one did this, that one did that. There were several. It's just because it's all a blur at this point. Pretty busy because the market was rocking and rolling. But getting into the spiders here, here we are. And this mid channel that we threw in a while ago that I just extended, you saw that. And this thing really is becoming interesting because we just seem to continue to hug our way higher on that thing. And that's what seems to be happening. So let me try to get a good spot to leave this line. Probably not a bad spot for it. And whatever this means, I can't be certain. I did talk about a breakdown and how you need to get in quickly, and you probably should roll down quickly. And that way, if it reverses on you quickly, right, you won't get a loser. You'll probably eke out a small win or a break even. There's a great example of that on that particular day, right on, I guess that was Wednesday, right, where they do exactly what we talked about, and then you get that drop, right? So you got to be careful with that kind of thing. And because they've got it right back up, they make a new all-time high yesterday. You have a closing all-time high, I believe, today. I think that might be the case for you had either a closing high or a new all-time high intraday on all four of the major indices yesterday or today, right? I believe so. So interestingly, this to me is very interesting because it's not generating that final push where it goes apey, right? It just goes bonkers. And so you've got to look out for that because if they get this thing above this mid channel, they manage to hold it, there should be a very high probability that it works its way up to the top of the channel. I would put that right now. Let's see, I'm going to ballpark that now at about 682, depending on how long it would take to get there. The longer it goes, the more time it buys for itself to go even higher. But this is why I'm continuing to say that, yeah, there's still a lot of potential. It does have to take this out, obviously, first. And I don't even really want to go into the rest of these. I will move it down, and I'm not going to rattle them all off. There's just too many fibs that we're working with right now from different moves that we've seen. But this will just give you the ideas over here. We on where we were saying like 2% up, this and that. And I think you could even say like a lot of times you will return if you do back off, you do return to a fib, which is a good reason to leave them up there too. But probably realistically, if I had to pull a price out right now, I'm going to pull out that 654 level. So downside, I'd pull 654. Upside, you could see all the fibs that are on here that you could use right now, along with kind of this mid-channel line as it wears on. Again, you get above there, you hold it. It looks like it's stabilized above there. Then you've got this potential here. And the way that it's shaping up, right? So you've got this, you've got the M2 going. That's been something we haven't talked about in a long time, but I believe that's still the case. Last I saw was a few days ago, and the liquidity's there. Despite what's happening, maybe with other things, the liquidity continues to be there. Rates are down. Rates are supposedly coming down even more in theory. It's the way the market believes it and is pricing it, right? So they've got everything they want, and then you just have to worry about, right, the sort of sell on news that you finally get your rate cut, and then you do a rug pull, and it's based off of some sort of a socio-political thing or whatever you want to go with. Who knows what kind of gray or black swan it could really happen on. But I noted on the slide that I rolled this week. A lot of things I was in, I just kept every time they would leap, I would just roll up, and I rolled initially to if I got in at say 80 delta and they grew to well into the 90 delta, I was rolling to some 70 and 80. And then if it kept going, I just started to lift it more towards right slightly in the money. And then if I do get a final burst, I'm just going to roll it to out of the monies. But I don't feel as though this is of the final burst. Now, had you said something like Oklo, and this is another one like with these crazy moves that are happening, and you saw them this week. I mean, this thing's up 29% today. And you could say, well, there was news, of course, but still, right, this thing's already up this much. This is a $6 stock last fall. I'm not saying that it's not having success or it's a bad idea. Nothing at all like that. I'm just saying that it's starting to get very vertical in some names. I mean, what slope is this lifting on at this point, right? Is it like, I don't know, 80, 85-degree slope, positive slope? So it's starting to get there. I've seen this in other things. So it doesn't mean that you immediately fall, right? I think what this kind of behavior means is that we could see that phase that's eluded us for so long. You're getting close, I think, to that. So we'll see. I mean, that would be good. That would be some really good trading if it were the case. It really would. So um, we'll go, we can go from there. Let me see if I can bring some other things up. We'll go back to SPY. So yeah, I mean, I think on SPY, we talked about that, right? It's really a case of you're at mid-channel. We're using the real clean charts on this. If I go over to this chart here, which is obviously meant to be a less messy chart, but it still is pretty messy compared to the one we were just on. But if you look at this one, right, you're at about 72 on your daily RSI. So that is not really extraordinarily high, but you are technically overbought. So maybe right after recovering, it needs to back off small and then come back up. I mean, it probably the way it's acting these days, I would say that's less of a chance than it normally is, but it still could do something like that. But right now, I don't think you're worried about, in terms of the market, I don't think you're worried about anything in terms of, well, this thing's in this immediate jeopardy. You do want to see this thing get through the mid channel finally and hold above there, something it has not been able to do, excuse me, for about a month and a half. So it hasn't really been able to get above there and hold for about a month and a half. So that's interesting, right? And if you kind of go back to, we'll just backtrack here a little bit into something that I was planning on covering a little bit later. But if you go into your market breadth, this is where it's in some ways that's why I'm calling it a mixed bag baby. In some ways, there's some good things happening in market breadth, and in other ways there isn't. So I would say it's probably slightly charitable to say it's a mixed bag baby. There's some things that you can see, right? The net new highs, new lows. This is looking pretty good. If you look here at the McClellans, right? You got the McClellan summation that's sort of working its way back up, and it's hasn't really rolled over in a heavy way, and it is working its way back up. But if you look at the oscillator, right, it's tilting down right now. So there's a lot of this kind of divergent stuff happening on a lot of things, not just in the technicals, in some of the economic data, in some of the survey data, right? But here's your cumulative volume index. Everything was really kind of all-time highish until today. And this could be related to, right? You just don't know what that's related to. Profit taking at the end of the week, expiration, which was apparently enormous, the largest ever. I was reading. I don't know if that's 100% accurate, but that's what I read. You can see that some of these stocks are just not getting back. You're not getting the great number of stocks above the SMAs the way you were back in here, where it was really rising strongly at a different phase. So yeah, you could say there's some a little bit of little bit of mixed bag stuff happening where some things are pretty good and then other things are a little concerning. So that's one part of that view. The other part of that view would be that if we get over here to the sectors, I'll bring this over here and we'll take a look at our 12 sectors, and I'll try to go through them because XLE, right? This is something that we'd like to see fire once again, as it's been for so long, right? It's sort of been disappointing this week where it starts knocking on the door, midweek breakout potentially, then you get the pullback, right? The good news is that last week's XLK catch up move to XLC when it started last week, that's continued on, and it obviously printed a new all-time high. I believe XLC, right, just kind of pushed up and last week mainly and stayed pinned up there. So that's a little, these things are obviously looking a little extended. It might be worth, let's see if I could pull this over. Let me push this down actually. But if we look at XLK, and we're going to look at that, come on. I'm going to try to make that a little bit larger for everyone to see. But here we are, and it's good. It's a good check on this, right? You're at 73 on your RSI right now. So again, you're already there. XLC, XLC is, let's see where it is right now on the RSI, and it is at 79, right? So to say that these things are sort of overdone right now is probably true, but right, they, as Greg McDermott often says, they can get more overdone, and they can clearly, but I think it's why, right? I think this is why it's prudent to be a roller, which is something that I harp on, but right? I feel like you've gotten a tremendous move. If it keeps going and you rolled, everything's going to still be wonderful. But if you took a lot of money off the table, reduce your risk, and you don't have as heavy of a delta at the moment on something that's got a 79 reading on the daily RSI, that might not be the most unwise thing you ever did, just to be prudent about it. And it's not the only thing that's done that. Here's 77 on XAU. So I'm not just saying it on things that, I don't, I'm not big. I actually am in tech right now. I got into had some really nice little things happen in quantum that I got into, but not the names I really wanted to, other things. But anyway, and here's the new all-time high in IWM, just to kind of note that. But let's go back and we'll go back to the sectors to kind of finish up on that. So yeah, so these two have done their thing. They're overdone. Financials, new all-time high, but again, somewhat reluctant. Real estate and healthcare, kind of defensive-ish, right? Not really doing much. That's not a big problem, really. Staples being weighed down, that's not a bad thing either. Having discretionary bid up versus Staples is good, but really discretionary did not have a great week either, right? It kind of did its thing early and then that was it. Um, and you've got XTN still reluctant to join the party. You've got XLB and XLI still somewhat reluctant to really, really go. And even XLU was reluctant to really, really go. So a lot of the things that have been, these are probably all risk on-ish type sectors to go along with these three here would be helpful too. But where you feel really good about things, you feel good about the IWM, you feel good about rates going down and that helping small caps and transports and so on and so forth. But we didn't get that breakout move. We just got to mid-channel and it was done in a way that's really probably not as healthy as you'd like to see. If you really want to maybe not be nitpicky, but just be reasonably objective and critical. I don't think you're nitpicking this week so much as you were last week because of the mixed situation in the sectors and with the market breadth that we saw. So I think it's a little bit, this is a little bit tougher. Having said that, as I said on the slide or wrote on the slide, I would not fight against anything because this stuff is still carrying the trend with it. Most importantly, of all things, it probably has the trend. And if you want to say, well, that's not the most important thing, I would say in technical analysis, it's probably the most important thing. So I disagree, just because the trend wins out so frequently over the counter trend. But if you want to say that it's M2 and other factors that are more important that are just being reflected, I'm not going to argue with you. I mean, I kind of agree with you. So yeah, there might be other more important factors that are driving it, but in terms of the technical analysis, the trends just remain up, right? So it's pretty hard to beat. You can see IWM. This is kind of a measure of sort of like money flow here, and that's really gotten absolutely uh, jacked, right? So there's definitely money heading in. And so the way you have to look at this is not simply that this is great. That means this thing's about to have an explosive breakout. I think it certainly could do that. However, right, what happens, you have to always think about the other side, always think about the false breakout. And what happens if this thing starts to go and then starts reversing hard? There's a lot of people whose thesis, right, will be completely upended and they'll be sort of left slack-jawed, and now they're back in managing risk. And then if it gets worse and worse, they're panicking, right? So this is what happens when people get drawn in. It doesn't deliver, and they have to quickly reverse course. So even though we've been hoping that this could happen, that the IWM would finally get back up to these levels where it was here, where it was maybe like a few years ago before that, it doesn't mean it's over just because it made a new all-time high and it's up and away. So just be really careful about that and be on your toes. And I'm just going to say the same thing. Like I would just going to leave the next couple of I'll leave the next couple of fibs up there at 248 and 253. If you know beyond today's high, if you start going again, those are your next levels that I would use for now. As far as the downsiders go, I think you're looking at them in the form of the short-term SMAs. The 15-day probably is the one right now in red. That's probably the one near 238. That's the big deal. You know, you could say, well, the 20 is right beneath it. Yeah, but that's always true, right? In this kind of a makeup, you got the 22. But I would start getting a little worried because that's pretty much where there'd be a support line. So that would be my little early warning where if it falls below that red 15, I'd be a little worried about that. The 20 would just be more confirmational that, uh-oh, it's not holding the 20 now. So that's kind of the little finer point I guess I'm trying to draw there. But you kind of have your levels just from looking at that. Well, let's go back to the one we shouldn't have skipped over, but I got on that little, risk on discussion, and that's IWM. Now we're moving on to Qs. And the Qs, you look to me like you're working your way back up, unsurprisingly, right where the Qs were lagging behind the spiders for a little bit. Spiders have kind of been done more of a mid-channel stall, and now we're getting this sort of situation here. I'm going to put that mid-channel right about there, right? So you're real close there. So this thing's close to taking that out, maybe holding and going. But again, what I would do is I would use your fibs at six. At this point, I would use 605 and 610 to the upside. That's 1 and 2% approximately, right? And then on your downside, I think you have to come back to this high that you hesitated at. That's going to be 593. And the next one really is going to be your lower support line. Also will be your 10-day right there. And that's going to be about 588 on that one. But, they obviously look very similar. Like I said, I believe all of these things made in the last session or two, either a new all-time high or um, a new all-time closing high, or both in some cases. So don't want to belabor that, but um, yeah, I mean, we could probably need to make an adjustment. Probably the one that's got the funkiest sort of widening channel here is the diamonds that we're looking at. So let me just do a little tweak here because I don't know. Actually, it's really not that is really not that bad. It's probably really this line that needs to be corrected more so than anything. We just see if I can get a better sort of angle with that line. It's just not catching, you're just not catching enough though there. What about if we come up to here off of that? Yeah, that might have to be about our better line right there for now, just doing a quick and dirty here. But yeah, I think you've got this, and you're still not even mid-channel there. But you get the idea, right? That if you can get above here, you haven't been really powering right that way. You've been grinding higher in a lot of cases. But if they get through the mid-channel and go, you can get these, really powerful moves, much like they held it here, burst up, pull back and go, touch it on the upside where we think it started at. So this gets through here, you could have that kind of run. So this is a tough. That's why I keep saying these are interesting times. We're repeating a lot. Why is the slide, pretty much the same, roughly the same week after week with some minor tweaks here and there, minor edits, and maybe a couple new points here and there. It's just because we've stayed in sort of the same type of a mode. There really isn't a lot I can say that's, oh, this is remarkably different, right? We've had these shifts and little bit of breadth and sector one way or the other, tilting one way or the other, but and this sector doing this and that, and maybe things got a little dicey with SMH and Nvidia, and they did, but they found a way to fix that. They did start to breadth was looking pretty rough, and they came in and even fixed that a little bit this week at one point when it was looking. That was probably on Wednesday when it was looking a little tough. Or was it, excuse me, it could have been, excuse me, late Tuesday. But yeah, I mean, I think you're just going to use your levels. The next ones up are 465 rounded up a little bit, and then 468. And then from there, I'm going to just kind of draw, if you kind of went up on a nice slope, 471. Those are your levels there. And you've got your SMAs here and your former high. And I think that's your 20 day at this point. So, right, it's the same story where the 20 and the support line are pretty much very close. And those are what you're waiting for if you're looking for a real crack to where you start to maybe hedge things in a bigger way or whatever the case may be. As far as counter trend trading goes, it's pretty hard on all these right now. Like I always say, you have to draw aggressive lines and trade it quickly and get out quickly if it doesn't work in your favor. If it does drop, roll down quickly so that you can get a little profits or do the quick trim and roll, which is probably even better. And then if that doesn't work, then you just get out for a small win or maybe break even or a small loss at times. And that's it, and you're done because you took your shot and, you just couldn't thread the needle. It's very hard to thread the needle against something this strong. But yeah, I don't think anything really, to me, nothing really went super, um, super well in the sectors besides the XLK and XLC, where some of these big names, right, have done their thing. And I think it feels like many months ago when we were talking about Apple, and I'm going to bring more in on just a sort of show what we were talking about. I think maybe like a 3 year weekly will work. We were talking about taking out these lines and how that could matter. That would finally be rid of this corrective action and move beyond it. And once that happens, don't treat it as a small thing. And not that we're tooting our horn, but I try to help share things that I learned in these videos, because a lot of new people come into them at times. And so that's one thing that I would go back to is that when you leave behind something and you start a trend change like this did, and we were sort of sniffing out that could happen, and it turned out that it worked out. This is in the prices that this thing was at versus where it is now. I mean, even by modern crazy movement standards, a nice whatever 30 something dollar run might not seem like a lot, but most people would take 15% in a month and a half or 2 months and be very happy with it. We most people. So, but yeah, I mean, there's been a little bit hesitation in Amazon as far as Meta goes. Right, it got back in the game. We had a trade in there on that. We had Microsoft and this one. Right, remember if this joins the party, and it's been oscillating back and forth around that 50. But if it breaks free and starts to go, and I think I would put this on your radar as one to watch for that reason. And that's one of the reasons why I'm going through all these, besides to check on the megas, because much like Apple, right, we could say that it started working its way through there. And it's once it sort of got through there, put that lowest low in, it's starting to try to pull off a trend change with higher lows right in here, and then this higher high cluster versus here, and now it's taking that out. So I'd be on the lookout for that if they keep this market going the way that they have tried to, right? I would really keep my eyes out for that. Google we'll go back to, but Nvidia, right? That's another one that's primed. We talked about that. I believe we talked about Tesla a while back. Google is stretched. It had the big burst, on more stuff, let's say, and now it's done that. So it's sort of in this state of delirium, overall. But we had talked about this one way back. We also talked about and that to me looks like it needs a little bit of a breather, based on what they've done to it now. It's 77 on your daily RSI. We'll talk about Netflix. That thing, that's certainly a point from which it could also start to do its thing, right? So I would be on guard for that as well. Some of these big names, which is one reason why I'm going through them. But the whole other reason, of course, is that on balance, if these things do start to participate, that's going to really power this market. And people are going to complain about the concentration, but the math is the math, right? I mean, I agree with the people that say, well, you should see more than just 7 or 8 stocks. There are really more than 7 or 8 stocks that are doing it, but of course the weightings make it so they have such a dramatic impact. And it's just the math of how these indices are calculated in the ETFs that are based upon them. So that's just how it is, and that how big the market caps of those stocks are. So they are what they are, and you can lament it or just try to trade it and hopefully make some money and do well for your family. This one I got in. I wasn't able to watch it, so I set up, an automatic. I set up an automatic entry using OR, and so I'm in this one. I just wanted to share this as another stock. This to me, we had paper on it. This to me was another one that you just don't seem to want to let go for too long, and this had a pullback, nice cool off, and then found support on the rising 10-day. You've got all your SMAs for people that like that. All of them are stacked and sloped, where the shortest is above the next longest, and so on and so forth. And they're all positively sloped on top of the stack factor. So I think this thing's poised to try to go in a bullish market. Um, what else was I in? I was in some crypto ones. I was in this one. I'm still in this one because I rolled. I rolled a lot of my. Uh, I've also rolled a lot of my precious metals things. I got. I said that I got out of them all, and I didn't. I kept thinking I was out of them, but I was thinking mainly of the more well-known names. That's where I screwed up when I said, "Oh, I'm out of my options." And I was actually not out of my options at all. I just didn't convey that well. So I had to do some things. Trying to think of the one that would maybe be, yeah, I think it might have been here. Um, was it this one? I'm trying to remember what are the ones that were not like lower dollars stock, because I have a bunch of these things that were not super low dollar, but I still have underlying and all that and other things too. I meant options when I talked about it, so I just wanted to do a little bit of clarification on that. But let me try to see if I come up with an example of what I meant about some of those rinky-dink names. I don't know if this one, oh, it did do something. Okay, so this is one where we had. This one looks like it might have tried to pop and failed. That's part of this game that you don't really get. Um, you don't really get that. They don't all like go, 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 right? I did have another one I think I may have mentioned is plug. This one was another one that tried to do something. I don't remember exactly where we got into that one. I'm trying to think if did NFE do anything? Yeah, this NFE went up to let's see, 285. So yeah, just to give you an idea. So there was paper on this one. Let me look what day it came in, 916. So then they pop it, right? So this is what I'm getting at, right? If you can get in on something that has a trigger, at a certain level, and then let's say I think the trigger was like around 180 something. But if you get in on 180 and it goes to 285, and you're in something, right, that has either shares or you're in something that has virtually no extrinsic value, right, it can be a low dollar thing that you can do really well on. And so again, with these things, you got to be careful because it always pays if you can to try when you get that quick pop, I think, just to roll up. And that way, if you roll up, you can, assure yourself of a win and stay in with a full contract total and things like that. So I don't want to go through all these rinky dinkers. I'm just saying that that's part of the market that we were in where I wonder if that, I don't know if this, I remember we had something in Big Bear and I got into that one myself as well on that one. But the AI names they some of these other so-called AI names they came for, and SOUN I think they came for too. But yeah, so a lot of that these things had paper, and of course the way things were going, and of course the way that my I got my butt chapped on my one of my favorite stocks setups made me pay attention and make a few seconds to get myself involved in other ones, figuring they would go. Um, I think I had Rigetti two at one point, and I forget I got taken out of that somewhere. By the time I scrambled and got through what I had to take care of and got back to it, I couldn't even get in on it because it had already ramped. And I'm like, oh, I'll just see if I can get a little pullback. I was busy at the time, and it just didn't materialize. But yeah, I mean, it's just that's the market we're in, and things are starting to get vertical, right? So that doesn't usually last for that long. These I'm not calling Rigetti rinky dink at this point, but you get the idea with some of these lower tier names. I could probably find us another one, like a dirt cheap. I'm trying to see if there was another. Oh, LAZR, right? That's another one. I don't have no idea what this stock did. Oh, okay. So it did try to do something. Yeah, so this one came in too. I think that we found this just above $2 somewhere. I can't remember the price on it, but it had that's what I mean. A little pop. If you get that pop, I always try to write that in some of these summaries on for the trade to kind of summarize the trade, like get that in the money option. And then when you get that, if you get a quick pop develops, try to consider rolling, to another strike that would let you take money off the table and then maybe kind of like free roll it, as people call it. It really isn't, but if you really want to try to, you really think there's something there that you're going for that big score, it's a lot easier to free roll it with money you've just made that you're willing to put at risk to do that rather than, your real, because these things are very hit and miss, but there are phases like the one we're in where these lower tier things it's kind of like they say every dog has its day, and these are the days that these kind of stocks do their thing. I just found another one alphabetically. We had LAES, and this thing ended up being wow, that's a good finish. But you can see there was even a little volatility, even though it took off, there was even a little volatility on Thursday with that one. That's the thing, right? If you get that big, I don't remember what day that came out on. I think let me look back here. Oh, that came out on the 12th. So that was back in here. What's was that? Let me see if I can find the trigger on that one. So the trigger was 321. It closes at 337. So you're in there you're okay to hold on. It's holding your trigger, holding your trigger, holding your trigger. Then it starts going, pops, right, and then frustrates you if you don't do anything, and then re-energizes. But if you said like, hey, whatever I got into, if you knew right on when it was popping that day, hey, if I can get my original money at risk back, and I can then roll up and I can play something different where I'm really playing with the money I just made and I'm just going to be patient, let this thing go. I think there's more upside. That's a lot easier to do. And psychologically, it's a lot more fun rather than having part of your account at risk where, right, it's backing up and you're not sure what's going to happen. So if you get, that's what I mean about, trying to be very proactive and prudent about your rolling, especially in these things, because these things really do inflate and go bonkers at times, but they also can deflate very quickly. So you gotta know the nature of these things and just if you develop that kind of a discipline, I think it can really help you out, is what I'm getting at. So I'm trying to think of what else we can talk about that's beyond like the market action. But I do think it is getting a little, it's getting to that point where it's starting to get a little overdone in terms of the day-to-day action, things getting a little crazy. And I think it would really be, um, you know, we could get into that mode where the four top dogs start to really, rumble and go beyond, right, a certain point. In that case of the IWM, it would be this new all-time high it's at today. And if they verticalize from there, if they really go bonkers, you're really in that probably getting close to that blow off, short-term blow off top slash, melt up type thing. I mean, it could, I guess, theoretically melt up for the next 3 months from here and just keep melting. It could, but I don't expect that. I mean, I think if it does melt up soon, that you'd have some kind of a pullback of significance after that, rather than the pullback first, then the melt up. So it's always tough to know exactly what they're up to and when, but just keep your eye on that mid channel and the Qs and in the SPY, and as long as you're above there, that's going to give them that chance to melt up. You go below there, be careful that they weren't able to hold that again, and you might get a little bit of a short downdraft that you might have to manage. And then we'll see what happens if it holds support and starts to bounce. Great. If not, it's a different story. Of course, if there's a news driver, there's a news driver. But I think on that note, I'm probably just going to wrap up because I don't really want to belabor this. I don't think there's a lot I can really share on here that's really all that much different. So I think it's still, steady as she goes. Your precious metals are getting overly done. Something's really up with that these things are doing what they're doing. I'm in a lot of them still. I'm going to try to, when I get a chance next week, I'm going to just try to do what I can to just to keep rolling along with the ones that I've got. As far as some of the underlyings, I'm just not going to let them go. I like having them as a holding right now. Of course, the physical, I'm probably never going to let go. Um, so that's just that. For me, I just feel like it's a prudent thing to do to have a certain chunk of that stuff in gold and silver. And I played platinum a different way than I planned to, but I was in and out of there small quickly, so it really didn't turn out the way I want because it kind of it wasn't as easy as I thought to do what I wanted. To put it sort of in a confusing manner and short. Anyway, that is that. Yeah, I don't think there's anything else now that I'm reviewing everything that I can really add to this. So I think it's steady as she goes. Just be ready. We're coming into, we're in and we've been coming deeper into that kind of a time where you can get news that can cause issues. And I think that's what I'm mainly on the lookout for right now, other than a little bit of overboughtness and a little bit of meltiness that's maybe getting a little ahead of itself. But we'll see on that. So everyone, hope this helps you in some way in this upcoming week or some week in the future. I want to thank everyone for tuning in. I want to wish everyone a great weekend. And if you're at the Market Rebellion event, I hope you have a very productive and fun time with everyone. Thank you.